Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is April 18th. I have the light jacket on again. It's gotten cold up here in Michigan, back down in the 40s. Was real nice there for a little while, up in the 70s and 80s, but it is still spring here, so that's to be expected. We are going to cover a pharmaceutical company, Bristol Myers Squibb. We covered them back in February, but this was a request from one of the subscribers, so let's take a look at them again. You can pause it here, go through my investing criteria. This is what I look for whenever I look at a new business or a business in my portfolio to make sure that it's still meeting my investment criteria. I recommend you check the companies within your portfolio from time to time. I just recently sold out of Prudential, for example, because some things got a little wonky with their payout. And anytime they no longer, meet my investing criteria, I look to trim a position. And if there's better opportunity, float that money over into the better opportunity. So again, you can pause this, kind of run through my criteria. And let's get back into Bristol Myers Squibb. Again, a pharmaceutical company. www.bms.com is their homepage where I pull this information from. Our commitment to our patients and customers, employees, global community, shareholders, environment, and other stakeholders. We promise to act on our belief that the priceless ingredient of every product is the integrity of its maker. We operate with effective governance and high standards of ethical behavior. We seek transparency and dialogue with our stakeholders to improve our understanding of their needs. We take our commitment to economic, social, environmental sustainability seriously and extend this expectation to our partners and suppliers. As a responsible corporate citizen, we seek to actively improve the health of the communities where we live, work, and serve around the globe. We promote health equity and seek to promote the health outcomes of populations disproportionately affected by serious disease. We believe our diverse and inclusive culture supports better outcomes for all patients, and we seek diversity in all aspects of our business. So basically, just a pharmaceutical company that makes prescription drugs. That's what they do. Now, the reason we are taking a look at them, Bristol Myers Squibb, ticker BMY, out of the healthcare sector. They were down on the day, 0.5%, so not a big drop. There were companies that were lower, but like I said, this was a request from a subscriber, so I thought we'd take a look at them. Closed out the day at $70.25. 52-week range as low as $65.28, as high as $81.44. Kind of floating in between that low and high here, maybe a little closer to the low, but overall kind of off that 52-week low a bit. Average volume 7.8 million. Today was 4.5. You can see a bit of a sell-off throughout the day, right? So they were down on the day, but it looks like they might have recovered a little bit towards the end of the trading day. Market cap of 147.75 billion, so they are a large company. Beta of 0.43, so they are less volatile than the overall market. That's nice to see. PE ratio, in my opinion, is a little elevated, 23.81. $23.81 would be the price you're paying for every dollar of earnings. That's what PE ratio means. Earnings per share, you'd be paying $2.95, or they're paying out $2.95 per share right there, EPS. Earnings date, the next one, April 27th, 2023. So coming up here, what would that be, next week? Yeah, it looks like it's coming up next week. For dividends, $2.28. They are quarterly payers, so divide by 4, though we'll see that here in a minute. And they have a decent dividend yield, 3.23%. Anything above 3% is very good in my opinion. Ex-dividend date, April 6th, so we just passed that here about 2 weeks ago. And according to Yahoo Finance, where I pulled this information, they have a 1-year target estimate of $80.30 per share, so speaks to some potential upside appreciation in the stock price. Now, I always say look at the statistics, go in there and look at the more information, revenue, debt. You can find all that under financials. Quick look in the statistics, excuse me for itching my nose on camera. But one of the things I like to look at is in the statistics, you'll find their 5-year average dividend. And what I'm doing here is looking at their dividend yield theory, right? So dividend yield theory says take a look at their average, which is 3.01. If it's above their average, which it is, 3.23, right? Their forward dividend or current dividend, 3.23% is above. That speaks to some potential undervaluation. If this number was below that, that would be overvalued, potentially overvalued. Another one I like to look at, free cash flow, and whether or not they're buying back their own shares. That's another one I like to throw in, is under their financials, and you'll find that under free cash flow, right? You can look at their income statement, balance sheet. Those are 2 that you'll find, and then free cash flow is the 3rd. So there, you want growing free cash flow over time, right? So in 2019 they were at 7.2 million. or 7.2 billion. You add 3 zeros to that, right? 2020 they were at 13.2, 2021 at 15.2. So a lot of growth there over 2021. Looks like a little bit of a dip here in 2022. So you really want to look at what's going on in 2023, see if this ticks back up. I'm assuming this may be a drop because of the CV-19 issue, right? A lot of pharmaceutical companies had a big run up in 2020 and 2021 and a big drop now that's kind of receding a little bit. So something to watch there. Hopefully they either level out or continue back up in their cash flow growth, but they are repurchasing stock over time. So you are getting that benefit as well. So that's nice to see. Now, I always recommend more than one source. So Yahoo Finance was the one we saw previously. Stockanalysis.com is another one I like to go to. I'm not affiliated with either, just two sources of information, and I always recommend that so that you are checking the information you are getting is accurate. Now, stockanalysis.com has 29 stock analysts that have taken a look at this. They call it a consensus buy. They have a low estimate of $62.62, which would be a 10.84% decrease in the stock price. They have an average estimate of $82.71, which would be a 17.77% increase in the price, and a high estimate of $99.75. That would be a 42.03%. And if you bought them now, you'd obviously collect that 3% dividend yield. Now, another one I like to look at, if you go over here, you can get a lot of the same information. That's why I say you want to back check it and go to statistics. That's where I pulled this from. Financial efficiency. Two that I like to look at: return on equity and return on invested capital. And I like above 10% or in line with industry average. These both are above 10%, almost 20% here, 19.8% on return on equity, and return on invested capital 15.1%. So very nice to see. Both of those are within line of what I'm looking for. So far I would say the only thing negative would be the free cash flow doesn't seem to be growing, at least from last year to this year. From 2021 to 2022. We'll see if 2022 to 23 is better. Payout ratio is right up against where I look at 75 or below, so they're still within range, but they are getting up there a bit, 72.7% there. They do have decent dividend growth, 7.77% in dividend growth, and they are a quarterly payer, as we saw, 57 cents per share currently, up 2022 they were paying 54 cents back in October, raised it up in January, so you are seeing dividend growth there. That's nice to see as well. Looks like their last payout or their next payout is going to be May 1st. So their dividend date was ex-dividend date was April 6th, and their next payout date will be May 1st. And whenever you buy a stock, you need to be buying it before, the day before at least, if not 2 days before the ex-dividend date, to make sure that you have and own the shares of the company to get the dividend. Well, in my opinion, this one is a little elevated on the price to earnings. I would say, though dividend yield theory says it's slightly undervalued, I would wait for more of a pullback on this one. I think pharmaceutical, though they do well whenever we're in recessionary times, because people go to them as like a safe harbor, right? People are still going to buy drugs whenever they need to, whenever they get sick, prescription drugs, that is, whenever they get sick. So typically these companies are where people go to hide. Same thing with consumer staples and the utility sector are some that people hide in whenever we have recessions, right? People aren't going to let themselves freeze to death or stop paying their utility bills. They're going to still pay for the pharmaceutical drugs that they need. They're still going to pay for the food that they need to eat, right? So those are some sectors people go to whenever we have recessionary times. But as we come out of the recession, these typically people do what they call rotation. They'll shift their money into other growth sectors like information technology, right? Communications. Those sectors will see growth on the other side. So this is one personally, unless there's a big drop over the next one, I would wait for a further pullback. I would love this back down into the low 60s, mid 60s even. 65 is what we saw for the low in the last 52 weeks. So I would like it to set a new low really and get back down to the low 60s or below. Personally, that's where I'm at. It's not in my portfolio, but it is one that I do have on my watch list. I do like the company, and I do like healthcare in general. Well, that is it. These are quick hitters trying to find value in the market. As some of these companies recover, it is getting more difficult, though there are still deals out there. So that's what you should be looking for. Find the value in the market where it presents itself. Don't be married to any stocks. There are thousands of stocks in the market, right? It's a stock market where you can go in there and find value in any market. It just might have to go into a different sector, right? So as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join me on this journey to financial freedom. And if you have not started your own journey, there is a Webull link down below. If you use that link and start your brokerage account, put some money in there, you'll get some free stocks. I'll get some free stocks. It is a way to help out the channel. Another way to help out the channel. Do all that good stuff. Hit that like button, share with anyone you think that might find value. Drop a comment. Let me know what you think of Bristol Myers Squib. Is it in your portfolio? Are there other pharmaceutical companies you like more, or other in the healthcare sector that you like more? CVS is in the healthcare sector. It's not a pharmaceutical company, so it doesn't necessarily have to just be a pharmaceutical company to be in the healthcare sector. And I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. Like this one was a suggestion from a subscriber. I will try to work those in if you have some stocks you'd like me to review on a stock pick of the day series like this one. Well, that is it. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you in the next one. Thanks for stopping by. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and money. Should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel or a certified financial advisor.